Welcome, and here we're looking at the US Treasury bonds, and we're also looking here for opposite stocks. We're looking for 1, 2, 3, a little bit joisty in there, but wave 5 is definitely in play here. As you can see, wave 4 is normally a bit complicated, but we may have we may have another low to come in here just yet, but we are looking for a low here. So that would be the reverse for the stock market. Okay, so just bearing that in mind, and we're looking for a corrective wave up here and then further down here for the bonds. So looking at the S&P 500, even though the market's still gone high, well, as you know, I assumed that it would have had a corrective pattern across here, but it ended up still moving higher, having the arrival, the reaction, the first high, and then finding support. And as that's normally the case, then you'll take out the high here in terms of trading, because you need to trade what you see. But apart from that lecture, the 5-wave structure that we're looking at here is still intact. Okay, so that means that at some point in here we'll have a corrective move back into the 1800 here. And the other important thing, as I mentioned yesterday as well, is that this move up here is quite strong for an A wave. I mean, an A wave in an ABC correction is normally the sharpest. So it's sort of okay in a way, but as I mentioned yesterday, this move down from wave 3, top of wave 3 here, we have counted it as a 5-wave structure, and it fits quite nicely. But I can also see that, as mentioned yesterday, that we can also count this down for wave A, B, C for the B wave, and down here for the C wave to complete it here, and then we'd be moving straight up from here. So we need to keep that in mind. But as I mentioned, this little structure up through here is coming to a close one way or the other. So we're looking at it in this structure now. We're looking at wave 3 here at the 1800, wave 4 here, and then counting 5 waves up. 1, 2, nice 3rd wave here, nice 4th wave, and then the 5th wave up through to here. There still can be a little bit more of a push up through to here, but either way, it's very close to having that correction, and that would bring us into the Wednesday and Thursday, which we normally see as being, high news days. A lot of information comes out in midweek, and that can cause the reaction there. This is the same for the Dow Jones as well. At 16,000 here, same wave structure up through here as well. In this structure here, it does appear that there is, if I just go back here somewhat here, in this structure here, there just feels like this is 1, 2, 3, 4, and 5 to complete here. So for the Dow, it just seems like this got this extra little wave structure here, and I've picked that up from this situation here, because the S&P 500, we called this the A, B, and C here for wave 4. But in this particular case here, this has got a low here. So we really need to look at this as, in this case, as an A and a B and a C here. And then all of this up for 1, back for 2 here, and all of this up for 3 here. So this can have a wave 4 here and a wave 5 here before we get, a reasonable ABC correction here at the 16,000. So just be mindful of that, and that could reflect back into other indices as well. Looking at the DAX, it's the same here as well. With the DAX and the FTSE now, we can actually also count 5 waves up through to here. We were looking to trade to 9.5, so if you're trading there, you might as well get out. But looking for some type of correction. Now, this can also move a bit higher, but there will be some type of ABC correction across here as such. So I should be able to move that up somewhat here, but we'll track that when, as it unfolds. And to get timing right, you would exit here and look to trade long over here. And if the opportunity presents itself, because we had a clear count here, then we could scale in through these this section here, and then look to add on here as well. So let's just see how that goes. The FTSE is the same as well. So with the FTSE here at 6,600 here, yesterday we were looking for wave 4 across here, and now we can see wave 5 moving up to the 6,700 here, which should complete up here. And in this particular case here, we can see that we've got a 5-wave structure in through here in terms of the 1 and the 2 into here. Nice 3rd wave in through here, and the 4th and the 5th through here. So you can expect this to terminate at the 6,700 here. Yes, it can push a little bit higher, but do expect a corrective pattern to unfold within group 2 at least, group 1 and 2. So group 2 being the support here and group 1 up here. I've got the little orange line in here because of the 72 number there, so it just carries a little bit more weight, so to speak. The Australian market, on the daily chart here, we're just looking at this now in terms of an A wave, a B wave, and a C wave here, and as intermediate wave 4, and we'll be looking for new highs to be made above here. This is the case too when we look at CBA. So maybe I can just bring CBA up here on this chart here. Just bear with me. So you can see the pattern here. This is a daily chart for CBA here. Our robo trade's got us long in here, of course, but you know, you can see that. I mean, I always figured it was a bit corrective because of this structure here, but we've got the A wave, the B wave, and the C wave, and this is moving up nice and strong now. I think they've got some interim earnings coming out today as well. So we'll see how that runs up through there. That gap would be an obvious target there, but the main point is seeing this structure here, and the SPY has got the same situation occurring as well here, the ASX 200, all you know, the same market. So with the move up through here, yes, it is the same as the S&P 500 and the other markets as well. So we could expect it to have some difficulty at the 5300 and 53 group 1, 53, 10, 20 and 30 to see some type of corrective pattern across here. Now, whenever that corrective pattern does arrive through here, then that's going to give us the buying opportunity to head up into a 3rd wave, which will even be stronger than the 1st wave here. So just looking at this on the 4-hour chart here, yeah, so same count as the US markets up through here. The old highs and the 5300 is a really good finishing line through here. So this is where we can expect a you know, and some type of corrective back. The 61.8 would be down here somewhere, but let's just see how that travels at this stage here. The other important point here too is that the 5300 here is the top of minor group 1, 100, 200 and 300. So getting support on top of group 1 here psychologically separates the market from the 5,000 here. So people tend to look up to the 5.5 rather than back to this 5 here once support is gained here and the orders start slipping up that side of the market. All right. That's it. The other thing too is that you know, as I mentioned with the Dow Jones, the Wednesday and Thursday, Wednesday can be the V-shaped day in the market, down in the morning and making the higher close for midweek, and Thursday can actually open higher and then trade lower for the day. So just be mindful of that and not to get trapped within that. And then that should leave us Friday and Monday to go for the next bull run to the upside. So let's see how we go with that. All right, cheers.